Have you ever thought about what would happen if someone got seriously injured at your biggest fundraiser? Not during setup, not when volunteers are decorating, but right in the middle of the big event. A guest slips on a wet floor, a vendor's tent blows over and damages a vehicle, a volunteer accidentally injures someone while helping them during the event, or a thunderstorm forces you to cancel an event that you've spent time and effort planning and preparing for. Here's the reality. One claim from a single event can easily cost more than what that event would have raised. And that's exactly why today we're talking about the hidden insurance risks of fundraisers, festivals, charity runs, galas, community outreach events, and nonprofit gathering. Because most nonprofit leaders spend months planning these events, but very little planning for what could go wrong. And that's where things get expensive. Let's start with the simple truth. Almost every nonprofit hosts events, whether it's a fundraising dinner, a golf tournament, a carnival, a festival, silent auction, charity walk, or even a community celebration. Events are often the lifeblood of nonprofit fundraising. They create awareness, they strengthen relationships, they bring donors together, but they also create temporary risks that may not exist during normal day-to-day operations. And that's where many organizations get caught off guard. Let's talk about some of the most common event-related exposures. The first one is injuries. This one is by far one of the biggest exposures nonprofits face during the event. Think about everything happening at a typical fundraiser. People walking through unfamiliar areas, children running around, extension cords crossing walkways, temporary stages, food stations, parking lots filled with vehicles and pedestrians. It only takes one person tripping over a cord or slipping on a spilled drink to cause a liability claim. Even if the injury turns out to be minor, legal expenses alone can become costly. The second exposure is property damage. Let's say you're hosting a community festival. A volunteer accidentally backs a golf cart into a vehicle. A rented tent collapses during setup. A piece of equipment damages the venue. Or a vendor causes damage to property you're renting. These situations happen more often than people realize. And when they do, somebody is going to get handed the bill. The question becomes, who pays? The third exposure is liquor liability. Now, this is a big one. If your fundraiser includes alcohol, your risk profile changes immediately. Many nonprofit leaders assume that because they're serving wine at a gala or serving beer tickets during a fundraising event, they're automatically protected. That's not always true. If an intoxicated guest leaves your event and causes an accident or injures someone, you could find yourself pulled into a lawsuit. This is why alcohol service should be reviewed carefully before the event takes place. Never assume that your existing coverage automatically addresses this concern. Another risk that catches nonprofits by surprise is vendor disputes. Let's say you hire a caterer, a DJ, a bounce house, a security company, a food truck, or any other outside vendor. What happens if they don't show up? What happens if they damage property? What happens if they injure someone? Many nonprofits assume that because they hired a professional company, the responsibility automatically shifts to that vendor. Unfortunately, that's not always how that works. When something goes wrong, everyone often ends up getting named in a lawsuit first. The facts are sorted out later. Then there's the weather. A risk that nobody can control. Maybe you're hosting an outdoor fundraiser. You spend months planning, you purchase supplies, you pay deposits, you market the event, you line up sponsors, and then a storm rolls in. High winds, lightning, heavy rain, extreme heat, the event gets canceled. The financial impact can be substantial. Depending on the circumstances, some event-related insurance can help with event cancellation expenses, but many nonprofits never explore that beforehand. Now, let's talk about one of the most important tools for managing risks for events: certificates of insurance. If you've ever hired a vendor, you've probably heard this term before. But many nonprofits collect certificates of insurance without really understanding what they're for. A certificate of insurance is simply proof that the vendor has insurance in place. Think of it as verification. It's not enough for someone to tell you that they're insured. You want documentation. Before your event, consider requiring your vendor provide proof of that certificate of insurance. That's anyone from your caterers, food trucks, security companies, equipment rental companies, entertainment providers, cleaning crews, and any other contractors involved in the event. But here's something even more important. Don't just collect the certificate, review it. Make sure that the coverage is active. Make sure that the dates are current. Make sure that the business listed on the certificate matches the company you hired. And if you have questions, ask your insurance advisor to review it. That's what they're there for. This brings us to the concept called risk transfer. Now, don't worry, we're gonna keep this simple. Risk transfer basically means making sure that the responsibility stays with the person creating the risk. For example, if a food vendor causes food poisoning, you want their insurance involved. If a security company's employee injures someone, you want their insurance involved. If a contractor damages property during setup, you want their insurance involved. Good contracts and proper insurance documentation help support that process. Without them, your nonprofit could end up defending claims that should be handled elsewhere. Now, let's talk about volunteers. Volunteers are the heart of many nonprofit events, but they're also the source of exposure that often gets overlooked. Volunteers can make mistakes. They can accidentally injure someone, damage property, cause an auto accident while running an errand, or create situations that lead to claims. That doesn't mean you have to stop using volunteers. Of course not. It simply means you need to understand where potential exposures exist and how your insurance program addresses them. The goal isn't fear. The goal is preparation. So before your next fundraiser or community event, here's a simple event insurance checklist. Number 1, review your liability coverage. Make sure your planned activities are consistent with your organization's operations. Number 2, determine whether special events coverage is needed. Not every event is automatically covered the way nonprofit leaders assume. Number 3, review your alcohol exposure, especially if alcohol will be sold, served, or distributed. Number 4, collect and review vendor certificates of insurance. Don't wait until the morning of the event. Number 5, review your contracts with vendors and service providers. Number 6, evaluate volunteer responsibilities and exposures. Number 7, consider weather-related financial risks. Number 8, confirm venue requirements. Many venues typically have insurance requirements that must be addressed before the event takes place. Let me give you a few quick examples. Imagine a charity gala where a guest slips on a freshly mopped floor and fractures a wrist. Medical bills, attorney involvement, potential settlement. What seemed like a routine event suddenly becomes a serious claim. Or imagine a community festival where a vendor's tent becomes airborne and damages several parked vehicles. Now multiple parties are involved: vehicle owners, the vendor, the nonprofit, possibly the venue. Claims can get complicated very quickly. Or picture a fundraising event where alcohol is served and a guest later causes an accident while driving home. Again, these are real world scenarios that happen every year. Not because nonprofits are careless, but because events naturally cause exposure. The good news, most of these risks can be managed. Not eliminated completely, but managed. And that's what good nonprofit risk management is all about. Identifying exposures before they become problems. Having the right conversations, reviewing contracts, reviewing insurance, and making sure that there aren't any surprises when the event finally comes. If your organization has an upcoming festival, fundraiser, gala, charity run, golf tournament, or community event, now is the time to review your risk. Not the day before, not the morning of, and definitely not after an incident occurs. Before your next event, reach out for an event risk review. We'll walk you through your plans, identify potential exposures, review vendor requirements, and help you understand where coverage. And if you found this information helpful at all, subscribe to the channel for more nonprofit insurance and risk management tips designed specifically for nonprofit leaders, executive directors, and board members. Thanks for watching. We'll see you guys in the next video.